Video, we'll be going over IRS Form 8858, Information Return of U.S. Persons with respect to foreign disregarded entities and foreign branches, also known as FDEs and FBs, respectively. This form pertains to certain U.S. persons that own either a foreign disregarded entity or a foreign branch, either directly or in certain circumstances indirectly or constructively. They'll use this form and some or all of the accompanying schedules to satisfy reporting requirements of Internal Revenue Code sections 6011, 6012, 6031, and 6038. As well as the associated Treasury regulations. So, as a quick reminder, Code Section 6011 pertains to just general requirements of tax returns or statements. 6012 addresses persons that are required to file income tax returns. 6031 pertains to partnership income reporting, and 6038 refers to information reporting with regards to certain foreign corporations and partnerships. So, before we get into the form itself, we should probably take a step back, kind of outline a couple of key terms. So, the following taxpayers must file Form 8858 and possibly Schedule M. So the following people that are tax owners of an FDE or operate a FB or own certain interests in tax owners of FDEs and FBs. So anyone that is a tax owner at any time during the tax year or annual accounting period will be required to complete the entire form, including the separate Schedule M. And so we'll go through the schedules really quickly. There's Schedule C, which is an income statement. C1, which refers to Section 987, gain and loss. Schedule F, which is the balance sheet. Schedule G for other information. And Schedule H for current earnings and profits. Schedule I, which is transferred loss amount, and Schedule J, which is taxes paid or accrued. So this is all information reporting. However, Schedule M is a separate is a separate form, separate document, and we won't cover it in this video. So a person that is a tax owner at any point during the tax year, a U.S. person that either directly or indirectly is a tax owner of an FDE or operates an FB. Certain U.S. persons that might have to file IRS Form 5471, that's reporting on controlled foreign corporations. That happens to be a tax owner of an FDE or operating an FB at any time during the controlled foreign corporations accounting period. Also, certain U.S. persons who are required to file Form 8865 with respect to a controlled foreign partnership. If this person is required, if the U.S. person required to file is a U.S. individual, then the U.S. person is not required to complete certain lines in Schedule G. However, if they are not an individual, then they must report the distributive share of income items outlined in Schedule G. Also, U.S. partnerships that are tax owners of an FDE or a U.S. corporation other than a REIT, an S corporation that is a partner in a U.S. partnership. So basically, if you're an individual or a corporate entity of some sort or a partnership that either owns directly indirectly, or constructively part or all of either a foreign disregarded entity or a foreign branch, you're going to have to file this form. So there are some exceptions outlined in the form instructions. Multiple filers that all have the same information. So Category 4 or Category 5 filers of Form 5471 or Category 1 filers of Form 8865 kind of lumped into the same category, and they may be exempt from having to file individually this form if the information can be included or attached to the multiple filer information provided on a separate form. So if the IRS can obtain the information that you would otherwise report on 8858 through one of the other required forms, because you're covered with other multiple taxpayers in similar circumstances, then you do not have to file this form. And just a reminder, a U.S. person, for the definition of this, can be a citizen or a resident alien, can be a domestic partnership, can be a domestic corporation, it can be an estate as long as it's not a foreign estate, or it can be a domestic trust as long as the trust is within the United States, was established in a court within the United States, and that one or more U.S. persons have the authority to control substantial decisions of the trust. Definition of a foreign disregarded entity is an entity that is not created or organized in the United States, that is disregarded as separate from its owner for U.S. income tax purposes. So if you think partnership or S corporation type tax treatment for an entity that is a foreign entity, that's basically what a FDE is. And then a FB actually has technical Treasury regulations verbiage, but basically it's a branch of a corporation or a qualified business unit that happens to be foreign. So at the top of the form, there's some specific information, name of the person filing the tax return. So, and then we'll enter John Smith's identifying number. We'll go through this form as if we're reporting on behalf of a U.S. person that is a U.S. like an individual. If you have a P.O. box number, you can list it if mail does not normally get delivered to your street address. Otherwise, indicate your street address even if you have a P.O. box. So we're going to make this kind of as straightforward as possible, since this is going to be pretty technical. However, we'll walk through this step by step. We'll just imagine that we're filing this on behalf of a FDE of a U.S. person. Obviously, your situation kind of dictates what it will be, but if you check on an FDE, then you must have an employer identification number to go with it. So that would be, say ACME FDE. We'll just put a sample address think everyone knows how to enter an address. And then the number in 1B1 would be an employer identification number, which is required to be able to treat this as an FDE. And it should be included, if it's a new EIN, it should be included on the Form 8858 for the first year in which you're treating this as an FDE. The old reference number, if there was one, would be entered on B2. So let's just say your employer identification number is that. So if it's an FDE, you would list the country under whose laws this disregarded entity was organized. Let's just say that it's a Canada-based operation and the date of incorporation happened to be effective date was the date as an FDE. Obviously, this is all these are all items that can be, based on your specific situation. If there are benefits that were claimed under a U.S. tax treaty, you would enter the treaty and the article number under Section 1F. We'll assume that there was not. Now, even though this is a Canada-based company, we're just going to put that they do a lot of their business in the United States. Now, you can list the principal business activity here. So let's see. We'll just say that it's a consulting firm and that their functional currency happens to be whatever the ISO code is for Canadian currency. And in order to find that, you can go into the form instructions and look at the link for currency. Each entity should have a functional currency in a foreign currency code. So you would have to go to the IRS website to get the information for and in this case, Canada's happens to be CAD. So that if you were using euros, it would be EUR. If you were using, say, Mexican pesos, that number would be MXN. Those are probably some of the more common ones. If you started going down the list of Japanese yen, it is not YEN, it is JPY. So, but we'll go back to our Canadian example of CAD. So now we're providing information for the accounting period, the name and address and identifying number of a branch agent, office, or agent if there's any in the United States. We'll just say it's Joe Smith's office, and he's right down the road. And then if this is a different location in 2B, the name and address of the person with custody of the books and records, bookkeeper, accountant, then you would indicate that right here. We're just going to make the assumption that Joe Smith's office also contains all the books and records. Now, for a tax owner of the FDE, if it's different from the filer, you would list that name and address as well as certain accounting information. In 3B, you would list the accounting period covered by their tax return, their U.S. identifying number and reference number, the country under whose laws they were organized, and then the functional currency. We're going to, for the purpose of this demonstration, just assume that the tax owner is the same as the filer. And we're also going to make the same assumption for the direct owner. Now, if you had to look at this from the form instructions, then you would have to attach a statement. If there's anything in line 4, if there's more than one direct owner, you would have to attach a statement to this form that includes all of the information requested. Obviously, if you have more than one direct owner, you can't jam all of this information into section 4, so you would just create an attachment, separate sheet of paper, or you print out an extra copy of the form, and as long as it has the name and address, country under whose laws they were organized, identifying number, and functional currency, you put that in there. And then finally, line 5, you have to establish an organizational chart that includes the name and percentage placement and percentage of ownership for all entities. This includes partnerships and other disregarded entities, the FDEs or the FBs position in the chain of ownership, the tax classification of every entity involved, and then the country under whose law each entity is organized. So there's not a template on the form itself or in the form instructions. There's simply a written description of all the required information that you must include in the organizational chart. In Schedule C, you're going to input income, basically your simple income statement, both in the country's functional currency and in the US dollar. So you're supposed to use this using GAAP rules, or you can also use the average exchange rate as determined under IRC section 989B. If the functional currency happens to be $1, you'll only complete this section. And then there are instructions for special rules if you use dollar approximate separate transactions as a method of accounting. That's DASTM. And specifically, the functional currency column should reflect local hyperinflationary currency amounts figured in accordance with U.S. GAAP. And then there's specific guidance under Treasury Regulations Section 1.985-3C on how to account for this on Schedule H. So for the purpose of this demonstration, we'll just outline some basic numbers. So we'll say that we achieved $100,000 in gross sales. Cost of goods sold, we'll just say that that was $50,000. Actually, consulting business will probably have much less in terms of cost of goods sold. We don't have dividends, interests, other forms of income, so we'll just drop down the $90,000 to here. Income tax deductions, I'll just say that there's $20,000 of taxes, $10,000 tax bill, $10,000 of other adjustments. When we strip all that out, we've got $50,000 of profit. So then you would translate that into Canadian currency, and let's just imagine that the exchange rate currently is 1.2 Canadian dollars for every US dollar. Then you would simply translate this into Canadian dollars. And we're left with a grand total of $60,000. So in Schedule C1, you would, if there are multiple recipients, there are special instructions on how to treat that amount that you're stating in the functional currency of the FDE versus the functional currency of the recipient. So if a qualified business unit happens to have a different functionality or functional currency than its owner, then the owner would be subject to Section 987 gain or loss, which is basically kind of a derivatives tax treatment for currency translation. So you would have to complete a separate Schedule C1 if an owner has multiple QBUs that are being reported. You would have to have a separate Schedule C1 for each person on file. And however, if the person that's filing knows that the owner of a QBU has the same functional currency as the QBU, then the person filing the Form 8858 does not need to complete Schedule C1. So basically, if two currencies are involved and it's all within the same owner, you don't need to fill out Schedule C1. This is simply there if there are multiple owners, multiple entities, and multiple types of currency that you have to then convert back and forth. In Schedule F, you're going to use this basically as a very straightforward balance sheet. You would have to translate this into U.S. dollars. As you can see, there is no equivalent for any kind of currency conversion. So let's just imagine that at the beginning of the accounting period, we had $10,000 in cash. At the end, we had $60,000 in cash. Then all other assets, we don't really have any assets. So the total assets just happen to be $10,000, right? I mean, this is purely for kind of enlightenment purposes or illustrative purposes, so these are not based on real numbers or anything. And then, as you know, total assets should equal liabilities plus equity, so what's true on the top must be true on the bottom. We'll just say that we have no debt. So all of this is on the equity side of the ledger. So in Schedule G, you're going to tick off certain of these fields, and these are pretty much mostly yes/no answers. So question 1, did the foreign entity own an interest in a trust? For this purpose, we're going to say no. We're also going to say no to whether or not the FDE or FB owned a 10% stake in any foreign partnership. For question 3, you're going to only answer this if the FDE has already made an election to be treated as a disregarded entity during the tax year. And if that's the case, then did the tax owner claim a loss with respect to the FDE stock or debt as a result of the election? So if this was deemed to be worthless stock, then there's additional guidance in the form instructions on the obligations that must be attached in a disclosure document. So if this might be a yes, you'll need to kind of look at Treasury Regulations 1.6011-4 for more guidance on what you need to disclose. Did we pay any foreign tax that was disqualified for credit? We're going to say no. Did we pay or accrue taxes to which Section 909 applies? We'll say no. is the FDE or FB a qualified business unit as defined in section 989A? Now, if you say yes, then you also have to determine whether or not the QBU is subject to section 987. And if that's the case, then you have to go back to C1 and complete this, right? So section 987, gain or loss, either recognized or deferred. If you do not own your FDE or FB, well, if you own it either directly or through tiers of FBs and FDEs, then you would not complete either line 7 or 8. So these are basically reporting on base erosion payments for section 7 and section 8, and a base erosion payment generally means any amount that is paid or accrued by an applicable taxpayer to a foreign person which is a related party, and with respect to which a deduction may be allowed. And then base erosion tax benefit would be a tax deduction that is allowed under similar circumstances. So if you do say yes to either 7A or 8A, then you need to enter the amount of the base erosion payments as well as the base erosion tax benefit. So in section 7, you're looking at amounts defined as an erosion payment or tax benefit from a foreign person, and then in 8A, you're answering the question about whether or not there's a base erosion payment or base erosion tax benefit to a foreign person. In item 9, you're only going to answer if the tax owner of the FDE or FB is a controlled foreign corporation. And since we're not going to answer this one either. So we have not answered 7 or 8 or 9. Going down to item 10, you're going to complete lines 10 through 13 only if the tax owner of the FB or the tax owner of the interest in the FDE is a U.S. corporation. So other than a pass-through entity. So if you're a business and you're filing this, then you would complete lines 10 through 13. If you're an individual taxpayer and you're required to report this, then you would not. So, and these are all different Treasury regulations determining whether or not the tax owner of the FB or the interest in the FDE is to be treated as a U.S. corporation, right? So for the purpose of these questions, you're going to answer as if it is a U.S. corporation, but then the instructions contain additional guidance depending on how the Treasury regulations might apply to your business entity. Since we're filing on behalf of an individual taxpayer, we're going to move on to Schedule H. So in this section, you'll report current earnings and profits on taxable income based on the functional currency. So this would all be reported in Canadian dollars. And I'll put in some examples here, although this does not reflect anything that was previously reported. These are just numbers that I'm pulling out. So when you look at net additions and net subtractions, these might be positive or negative adjustments related to capital gains and losses, depreciation, depletion, and amortization, investment or incentive allowances, charges to statutory reserves, inventory adjustments, or taxes. So basically those are the allowable adjustments that you would enter on either line 2 or line 3. So we'll say that there's $2,000 of additions, $1,000 of subtractions for a total current earnings and profits of $11,000. Now, for DASTM purposes, this might be different. We'll just assume that it's not. And we're going to carry over this $11,000 directly. And then you're going to need to translate this into US dollars, right? So let's make this a little bit easier on myself. Since we've already come up with a Canadian conversion rate that happens to be neatly 1.2 Canadian dollars to a US dollar. So we'll put this here. And we'll make this a nice $10,000 earnings and profits. In Schedule I, you would only complete Schedule I if the FB or the FDE is either directly owned by a domestic corporation or indirectly by a domestic corporation through a tiered structure of FBs, FDEs, right? So since we're on behalf of an individual taxpayer, we're not going to do this. We're going to skip down to Schedule J, which basically lists taxes paid to either the United States or the foreign country or a U.S. possession, depending on the specific situation. So you're already calculating the foreign and domestic taxes that you've paid or accrued. And you're going to calculate this based on, let's see, here, country of possession, do not try to write the entire name. The IRS keeps a unique code for each country on the website. So the code for Canada happens to be CA. And we're going to say that the tax year happened to be I apologize. This should be in Canadian dollars. So, and then in columns F through I, you would enter the amount by separate category of income. So, you can have everything that falls into a general category of income, for example. You can have different categories of income based on, whether it's, a tax refund, whether it's a dividend, whether it's a capital gain. But in the form instructions, there's discussion of a tax refund being reported as a filled-in part of the filled-in schedule. So in this case, you would not put anything different here. However, you would need to refer to categories of income based on the instructions for IRS Form 1118 or 1116. 1118 being the foreign tax credit for corporations, 1116 being the foreign tax credit for individuals, estates, or trusts. So when you look at categories of income for individuals, there are several different categories. There's Section 951A category, there's foreign branch category, there's passive category income, there's general category income, there's Section 901J income. There's certain income that was resourced by treaty, and then there are lump sum distributions. So for the purpose of this illustration, we're going to say that everything was in the general category. Okay, so if there is foreign branch income, you would enter it here, and then that would be reduced by this amount. So make sure all the columns to the right total the currency that you're reporting on the left in US dollars. So in Schedule M, which is not shown here, you'll need to file that separate schedule with each Form 8858 if the FDE or FB entered into any transaction with the filer or other related entities during the annual accounting period. And every U.S. person that is required to file Schedule M must file the schedule to report transactions that occurred during the annual accounting period ending within the person's tax year. So that's all we have for this article, for this video. If you'd like to read more about the form itself, we've written at length about every schedule that you've seen here, the form itself, and Schedule M. Simply go to teachmepersonalfinance.com, type in IRS Form 8858 in the search bar, and you should see this article and the results. If you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions, comments, or concerns, please post them in the comments section or send me an email. Thank you very much and have a great day.